Tammy, am I okay to roll into it? Are you nodding? Sorry. Yeah, okay, I'm gonna go. All right, thanks everyone. I do have, I'm gonna share my screen, so just give me 1 second to get that all set up. Can you all see it? Okay. Um, great. All right, I'm going to get started. So I just want to thank Women in Housing and Finance first for, giving me the opportunity to speak with you all today. I love talking about the Federal Home Loan Bank and the Affordable Housing Program in particular. And really thanks to each of you for being here. There's always so much going on, a lot of competing priorities. So appreciate you giving up your WIFPA Thursday. And I know we also changed the date. So thanks for accommodating it into your schedules. So as mentioned, I'm Megan Kreider. I oversee the bank's affordable housing program as well as our Blueprint Communities initiative. I'll tell you a little bit more about that later. Allison's on the call as well. So Allison, feel free to jump in at any time if you want to kind of talk about the bank and who we are and what we do. So I grew up in Pittsburgh. I still live in Pittsburgh with my 2 daughters, my husband. We have a lot of animals. I do have family throughout the state, some in central PA, some in the Philadelphia area. So I really do consider Pennsylvania home and just really enjoy being a part of WIFPA. I am a member. I serve on the communications and steering committee, and it's really been a great experience. So if you're not a member, I really encourage you to do that. One of the best things about it is just in our introductions, you saw how many different representations of the industry there are. So it's a great way to meet people and collaborate. So again, if not a member, I do encourage you to become one. And I'd also just like to take a moment to really thank, each of you in your respective roles and the expertise that you bring to the affordable housing industry. There's a huge shortage in our country in units, and Pennsylvania is, of course, no exception. And I like to think that each day we're working to make that gap just a little bit smaller and affordable homes, more attainable for someone. And we shouldn't take that for granted. So thank you. So I give a lot of talks about the Federal Home Loan Bank and the Affordable Housing Program, but it's usually always forward looking, like looking forward to a upcoming funding round. But we're coming in at an interesting time because we're currently in an active cycle. So because this is somewhat off cycle in our presentations, and some of you on the call may even have an application or two into us and are awaiting the award announcements, there are some things that I can review and some things are confidential at this point. So and when we open up to question and answer, I'll do my best that I can to answer, what I can based on what the question is. So I thought for today I could provide you with an overview of just the really the Federal Home Loan Bank of Pittsburgh and who we are, and talk about the different community investment products that we have, because I know a lot of folks are familiar with the affordable housing program, but it's really just one of 6 that we offer. And as many of you are on the call are aware, we also had some major scoring changes to our 2021 funding round. So I wanted to spend a little bit of time talking about the process that we underwent to determine what those priorities would be, and a little bit about what those priorities are. And then I'll cover just a bit about, very small again, because we're in an active funding round, like what are we seeing this year, and what you can anticipate for next year. Certainly ask me questions. We're a smaller group, so if you want to ask me along the way, or I'll open it up at the end. So with that, I will get started. So we are based in Pittsburgh. We're located right downtown. We have about 220 employees in total, but in the community investment department, there's about 15 of us. And the Federal Home Loan Bank name is pretty interesting. So we're not the federal government. We don't provide direct home loans, and we are a bank, so that's good. We are based in Pittsburgh, but we don't just serve Pittsburgh, so our market is pretty big. We are one of 11 federal home loan banks throughout the country. We're a member-owned cooperative that was created by Congress in the 30s, 1932. And we really exist to provide funding that's in the form of advances or loans to our members. And that's throughout all economic cycles. So no matter what's going on in the market, we're there. The access to liquidity that we provide for our members, it really helps support their business growth, community lending, their affordable housing, and economic development areas that they all serve. And when I use that term member, what that means is commercial banks, insurance companies, credit unions, community development, financial institutions of all sizes. We do have a member on the call. I don't know if he jumped off, but he was here. He's still there. I see his name. We have about 282 members of the Federal Home Loan Bank of Pittsburgh, but they do have to be chartered in Pennsylvania, Delaware, and West Virginia. We refer to that area as our district. So community investment really is an integral aspect to the Federal Home Loan Bank's mission by providing services to our members to help vitalize their communities. So again, I know most of you know.
Megan,
oh, yeah, go ahead.
Well, I just want to jump in really quickly because it's a really neat story. And I know everybody's here for the affordable housing, which we love, but it is a really neat story. Megan mentioned that we provide liquidity in all economic cycles. And the pandemic was a really interesting example of that. And the banking system as a whole, I'm going to forget the numbers, but Pittsburgh went up, $20 billion or something in a matter of weeks. I mean, it was like overnight. People needed liquidity. We were there. We provided it. So it's really a neat story. And I'm getting the numbers wrong for certain, but it really is what Congress designed us to do. And fortunately, we make money when we're loaning money to our members. So then we can provide 10% of that to affordable housing. So I know that this group's really interested in the affordable housing piece, but the system kind of works as a whole to provide that liquidity so that bankings and credit unions and CDFIs are able to provide loans and things in their community. And so it's part of a system that's kind of not talked about a lot. So I apologize for interrupting there, Megan, but just wanted to highlight it.
No, that's great, Allison. I will talk a little bit more about our funding levels and kind of a bit more about how that works. So I appreciate you bringing that up because it is a really important conversation. And you're right, in our world, in community investment, we focus on community investment, but there's this whole other side to the bank, those, 220 minus 15 employees that are doing a lot of the liquidity and the banking stuff. Moving on with the presentation, again, I wanted to just kind of introduce you to our other products. I feel like some of them you may have heard of, or they may even span into the work that you do. So I thought that I could cover those. But last year alone, we provided $52.7 million across products to support businesses, affordable housing, and communities. So we do that through each one of these 6 products. I am going to focus on AHP today, but I wanted to cover each of these again at a really super high level. So has anybody heard of our First Front Door program on the call? Some folks. Okay, so this is a really popular program that we have. It's our first time home buyer program. And basically for every $1 an eligible home buyer puts in, we'll match up to $3, up to $5,000 in total to assist with their down payment and closing costs. There is income requirements, 80% or less of the area median income, and they do have to receive their first mortgage through a participating member of the bank. So a little bit of a side story. Literally this week, dropping my daughter off at preschool. She just started this new school. I was chatting with one of the new moms, trying to get the lay of the land, who's who, what's what. And she and I were chatting that get to know you conversation and found out that she was a First Front Door recipient. And it's just so cool to always, meet a recipient of the funding and hear their story. It really makes, our work come to life. And I really hope that you and your respective roles have been able to kind of experience something similar. A lot of us work behind the scenes, so to speak. So to be able to kind of see that come to life, or that concept of that building that you're building, or those numbers that you're looking at on paper really turn into a 3D thing, it's pretty fantastic to witness. Banking on Business provides secondary unsecured loans to small businesses. So our members who may want to support a particular small business of theirs, but that customer may not have the equity, the collateral, or they're not meeting some type of underwriting requirement that the lender or our member has, they may be able to secure a Banking on Business loan that really is designed to have favorable terms to help that borrower meet their financing need and make a deal become whole. So we have supported everything from manufacturing businesses, restaurants, veterinary clinics, to family farms under this program. And I'm sure some of you on the call are familiar with our Home for Good program. A lot of times those folks that are in the affordable housing space are working on the social service side of things as well, and they want to get into the Home for Good program. So this is one of our newest products that provides funding for critical needs, innovative solutions for homeless. While it can be used for brick and mortar, it's more so the softer side of social services, case management, pilot programs, rental assistance, and so forth, and all for the sake of those experiencing homeless or who are at risk of homelessness. Our community lending program is the next product. Who's here from Pittsburgh besides Allison? Anybody else? All right, well, this is a local shop and save that happens to be like 3 blocks from my house, which is also pretty cool to see. But so community lending program is a type of low cost advance that our members can get for specific qualified lending activities. So it can be based on location or lending type, but affordable housing lending does qualify for a lower advance for our members as part of this program. And the last one that I'll cover is Blueprint Communities before kind of diving in a bit more to the affordable housing program. But Blueprint Communities has been helping revitalize communities throughout Delaware, Pennsylvania, and West Virginia since 2005. And we partner with lead agencies in these 3 states to help them select and support communities so that they can build on local leadership skills very much at the local level, create individualized and tailored community revitalization plans. And we also help to coordinate and encourage private and public investments, all for the sake of redeveloping that community. As part of the Blueprint model, teams are created. They're made up of individuals within diverse segments of a community, and we really utilize a holistic approach to team building and community development. The member connection is that a member does participate on that team, and it's really a great way to establish relationships and partnerships, stay informed of what's going on in the community, as well as potentially providing funding opportunities and financial opportunities that the team may need. This was one of our most recent cohorts, but it was in West Virginia. Any questions on any of the other? I just wanted to give you a dive into, the world of community investment within the Federal Home Loan Bank of Pittsburgh. Any questions or comments or reactions? Okay. So the Affordable Housing Program is considered the bank's flagship program. As I mentioned, there are 11 federal home loan banks, and we all offer the Affordable Housing Program. Now, we each manage it differently with tailored funding priorities, but we all follow the same regulation, and we're examined by the Federal Housing Finance Agency, or the FHFA. So it is a competitive program that could be used towards the development of affordable housing. So whether that's new construction, rehabilitation, acquisition, or a combination thereof. We currently offer up to $750,000 per project that comes in for an application. So the folks in the household who are either going to be the tenants or the homeowners of the affordable housing, they must have incomes at 80% or less of the area median income. There really is no wiggle room there. That's a regulatory item. And the amount of funding we have available varies each year. So this was a little bit of what Allison was getting to, and it's all dependent upon our earnings. So our members, they borrow from us when they need that liquidity. And it's through that lending to our members that we generate our earnings. So we set aside 10% to fund the affordable housing program. So just kind of summarize that, AHP is funded solely by activity with our members and does not use any tax dollars. We've all watched the effects of the pandemic, over the past few years. It's been interesting, it's been scary, it's been uncertain, and even unprecedented in many, many ways. And what we're seeing is that the US government's kind of infusion of capital was very critically important to combat COVID-19 and the pandemic, but it did alter the market and the liquidity needs of our members, meaning they're borrowing less. And again, as Allison said, we are structured to be there during all economic cycles. So borrowing less, we are functioning the way we're designed. And that lower demand for the advanced volume basically translates to the amount of AHP we will have in the future. So what I'm trying to basically say is that AHP in future years will likely be reduced from our recent historic highs. You can already see that this year we have 22 million available. Last year we had about, I think it was 35, I want to say 35 some million. So it varies every single year. So we have,
and Megan, I'll just add, just jumping in just a little bit, and obviously the Fed's actions and everything else the liquidity in the system has been just enormous, which was an absolutely strong necessity. But this is one of the reasons that the Federal Home Loan Bank system was set up to be such an accordion type structure. So no matter how big we need to get or no matter how small we need to get, we can still function. It's just going to be a lot of the difference is that 10% our net earnings will be down. So you'll see fluctuation in that. And of course, Congress set the 10% requirement for the affordable housing program. But of course, that fluctuates, and it's going to fluctuate across the system. Some banks are weathering the pandemic a little bit differently, but again, the need for that money was so enormous. We certainly understand that it's just going to have the impact on this side, but certainly tons of money has been infused into the system. So.
Sorry, I was muted. Thank you, Allison. So, we have always believed that every dollar of VHP is super critical, but now really even more so. And to help ensure that each dollar is earmarked for the most critical identified needs, we recently completed a housing needs assessment for our district, Delaware, Pennsylvania, and West Virginia. And then we structured our competitive scoring methodology around the results of that housing needs assessment as the best way to kind of channel our available funding to meet those most acute needs. So that also includes addressing racial equity and inclusion. And I'll kind of get into kind of where we see that in our scoring methodology. We also have a very active board of directors and an active affordable housing advisory council. Our council is made up of experienced professionals in the space of affordable housing and economic and community development. And it's a very collaborative partnership between the three parties, the board, the council, and the bank. And we all kind of work together to ensure that those dollars available are, again, prioritizing needs. So hence those 6 community investment products, but also more specifically our scoring structure. Oh, I forgot to show you everybody's face. So this is our council. Some folks may look familiar that we meet at least 4 times a year and several conversations out of our 4 kind of formal cycles of meetings. I already had mentioned our regulator, but these are the folks, and they are on our website as well. And folks in the community can certainly reach out to them because they are kind of the voice, the eyes and ears of what's going on in the development world to help us and guide us towards these policy decisions. So the history of our housing needs assessment, our history is short. It happened last year. So our regulator, FHFA, they issued a new regulation that basically said you have to complete a housing needs assessment, a comprehensive housing needs assessment. And this regulation became effective January 1st of this year. So we completed our assessment last year. And we spent about 6 months talking with our Affordable Housing Advisory Council, our board of directors, on how to structure the VHP scoring. And we made some big changes for folks who are familiar. That was kind of a hot topic at the beginning of this year and how we kind of rolled that out. So the study itself comprised of a pretty heavy mix of quantitative data, but also qualitative data. We worked with a third-party consultant to perform the study. Information was used from the community survey data, HUD, labor statistics, Zillow, S3, local and state housing reports and plans. So really a huge whole look at that. Not only that, we had an online survey. We had about 289 affordable housing stakeholders participate, provide us with feedback. We had 5 focus group sessions, all in the space of different areas like urban versus rural needs and common themes among, housing issues there, equity and quality of life issues, the banking community, homeless and vulnerable populations, all to kind of gather this data to make it into a comprehensive report. So when you kind of add that all up, the difference in the scoring structure has changed. There's some stuff that is unchanged, and I'm not going to go into every category in depth because if you are interested, we do have webinars specifically on it. Each category can get pretty detailed. So I'm just going to kind of do the high level of what's similar, what's different, and why was it changed. So unchanged are listed there, unchanged from a concept perspective, unchanged from a point perspective, and that's a little bit of regulatory requirements and the needs within our district. So empowerment, for example, rural housing, we wanted to continue to encourage that. It's difficult to develop in rural areas, and we believe that housing, while incredibly important, is made stronger by having empowerment services or a holistic view of somebody that's living in the home or the apartment. We eliminated some categories: our readiness to proceed, our member financial participation, and our subsidy per unit. Readiness to proceed in particular was always one that was, if you had a LIHTC project in particular, one of the huge benchmarks was whether or not you had that LIHTC award, you would receive points if 75% of your funding was committed. Now that that has gone away, it provides applicants a little bit more flexibility based on where they are in their development timeline, where they are in acquiring their sources in order to make a project happen. But those have been since eliminated. Based on the housing needs assessment, there were some things that we kind of had right from our current scoring model based on the prior needs, but we needed to make some modifications and tweak them a bit. For example, homeless, the housing needs assessment, and especially with the pandemic, all of those eviction moratoriums, everyone was so worried about folks not being able to pay their rent or their mortgages and so forth. And just, we were dealing with a homeless issue even before that. So we increased the point allocation, and we also expanded the definition. Housing for individuals with special needs, still so critical throughout our district. While the points remain the same, we expanded that definition to include vulnerable populations and targeted populations. So that adds in military veterans, youth aging out of foster care, formerly incarcerated persons, and folks that are 62 years and older, and housing specifically for them. Our housing needs assessment identified vulnerable populations, as having typically lower incomes. I don't know that that's necessarily a surprise. And with lower incomes, you're more cost burdened, unable to find rental housing, but specifically permanent supportive rental housing due to those shortages. To add some numbers to it, in our district, there are over 366,000 households with extremely low incomes and are unable to work due to a disability. So that alone, just think about how much and how critical affordable housing is just for that pocket of folks. West Virginia has the highest rate of any state at 7.8% of households that fit into this kind of category. And Philadelphia, the data shows that it has the highest rate of major cities in the district, with 1 in 10 households receiving SSI. So just a huge affordable housing need there, as well as cost burden for the folks that are kind of experiencing that and those hardships. Our housing needs assessment was also pretty clear that there are large disparities between race and housing. So in particular, the Black and Latino renters and owners they are more likely to experience a steeper cost burden due to housing costs. So that's usually an outcome, the data shows, from lower wages, but also inequalities to housing access, right? So in particular, the data showed that homeownership rates among Black and Latino households are disproportionately lower than white households, regardless of their income. So because of such, we tailored our scoring to help HP fund and prioritize those needs, which brought about the creation of extremely low income, serving projects that are within census tracts that are low income or have a majority as minority population. And then an additional incentive from the points perspective, if you're trying to create new home ownership in those areas, to provide more access to housing. So that's a high level change of our scoring insights. I'd be happy to answer any questions that you might have about the housing needs assessment or scoring, and kind of, the process of how we got here. And okay. So I again want to just tell you a little bit about this funding round. I can't say too much, but this graph here just kind of shows you that we have seen a decline in applications. So the reddish line up top is the total number of applications over the past 4 years. Pennsylvania actually had an uptick in applications. So Pennsylvania, the pandemic, while it hit everybody, we didn't see it from an application submission perspective, whereas other states really had to take a pause due to, various factors with their projects, their timelines, their funding, whatever the case is. But Pennsylvania is where we do receive most applications from a concentration standpoint. Typically each year we actually receive applications from about 20 to 25 different states a year. This year we didn't see as high of numbers out of district, but still, we receive a lot from all over the place. And then from a rental perspective, rental versus home ownership, because we do accept and underwrite both types of projects, both a decline, but we've always received more rental. And the housing needs assessment also showed that rental housing was one of the biggest priorities and needs within the district. So you can kind of see as you dive into our scoring structure, a lot is kind of geared toward rental, but not at the detriment to homeownership, because we do have homeownership being incentivized in different areas, like the low income minority. And this last slide is just to kind of show you the demand. So the story, even though our volume of funding changes, the story does not change. There is not enough HP to meet the demand. So in gray, you'll see the amount that's been requested just of AHP dollars. And in red, you'll see the amount we have available. So this year we had about 75 million, 75 million requested in AHP, and we have about 22 million to award. For next year, I always say it's like never too soon to start to think about an AHP application, but if you do, keep in mind that we do make tweaks to our implementation plan every year, and we always release the new one for the next funding round. So we will have more information about the next year's funding round available in the first quarter. You can expect likely a similar timeline to what we did in 2021. So applications due in August, award in December. We typically make things available outside of the system to allow time for you to prepare your application in April, May timeframe. So we do anticipate that being similar. We do post it to our website, the implementation plan, once it's been approved by our board. But if you are interested in receiving announcements that we have about AHP, feel free to email me. You can get on what we call our interested parties list. You'll just kind of receive our communications. You can opt out at whatever time, but that'll give you all of the information you need to know about the affordable housing program specifically. My contact information is there, as well as our general AHP mailbox and phone number, but I'd love to get to know each of you a little bit more. So please don't hesitate to reach out to me about, anything that I've covered today or beyond. So that is, what I was hoping to share with you today. If there are other questions or comments, happy to take that.
Megan, are you able to share the point, like where you've seen the points come in with the applications in this round? I know that was a big question with the new implementation plan, and developers were very curious as to this, like where the scoring should really be to be competitive.
Yeah, I can't really say that. I'll say that it is different, and we will release that information. Generally, let me think what I can say. Generally speaking, applications overall didn't score as high in total, right? Now that doesn't mean, like, we still don't know where the lowest funded score will be. So I can just tell you outright, we don't know that. We're still doing our underwriting. But overall, when the system automatically scores, some projects in prior years were in like high 80s, and we're not seeing the high 80s, this year. So we will have that information. I know that you're right, Tammy, that was a huge conversation because there was always historic precedent to kind of gear yourself towards. And unfortunately, this year, we were all in that boat of, even the Federal Home Loan Bank in that boat of,
Sure.
we just don't know, and we're going to have to kind of wait and see. So folks decided to either throw their hat in the ring or decide not to, this year.
Great, thank you. Be interesting to see with these changes, what types of projects, if that changed sort of the types of projects that you guys are awarding to.
Right. Yeah, it will. And, we have our council, we review the types of projects that are awarded every year. We take a look at our equitable scoring across different types to ensure fairness and smooth out anomalies over the years. So all of that is really reviewed very much so at, obviously the bank level, but also with our council and our board. So we do look at that pretty meticulously.
Great, thank you, and thanks for this presentation. That was really helpful and very nice of you to spend some time with us. Thank you so much.
Yeah, I'm happy to do it. Thank you.
Megan, I'd like to add that for State College perspective, I'm really interested to look at the changes in the scoring. We have a real affordability problem here with housing because there's so much competition, but we couldn't score very well previously because we didn't have as much blight, to show community and that would be revitalized. We weren't really, our project would be really helpful and effective in affordability, but it wasn't really revitalizing the neighborhood because the neighborhood wasn't in that bad a shape. So I'm really interested to see if the revised scoring will help us to do some more affordable housing projects with the Federal Home Loan Bank here. Excited about that.
Thanks for that comment, Maureen. So that we did have a specific category related to blight that has been since eliminated. It was under our community stability criteria, but so while that's been eliminated, we still do provide points to rehabilitating existing housing stock and trying to preserve existing housing. I'd say a lot of what happens too, though, and where you'll see a lot of points is who you're serving, right? So if you're serving folks with lower incomes, if you're serving folks that need a special need or targeted population, if you're serving folks who are homeless, that's where you can see projects picking up a lot of points, kind of regardless of location. Now there is a whole other location side, that if you're rural, if you're building in low income, if you're building home ownership in lower income minority neighborhoods. But I do encourage you to kind of look at the scoring and kind of pencil in any potential projects that you have, and based on that scoring, where might you be able to pick up points? And then for next year, we will have a benchmark, right? We do publish what the lowest funded score was, and we'll have a benchmark for applicants to be able to gauge and guide themselves, while also keeping in mind that our funding levels do fluctuate each year.
To follow up on that, Megan, do you already have a sense of when your next application round would be due?
It's usually applications are due in August,
okay,
with awards in December. So there is plenty of time. And from our perspective, a project or an application can be submitted, but a project cannot be considered complete by the time our board awards. So if you've already started construction, there's a gap, you're still looking for funding, it could still be a possibility for AHP, but it depends on your project timeline and when you're considering it complete versus when we award, which is December.
Thanks.
All right, well, thank you again, everybody. I appreciate the time and opportunity, and I'm serious when I say call me. I will talk about AHP with you all day. I'll talk about other stuff too, but I'm happy to continue the conversation.
Well, thank you, Megan, and thanks everyone for joining. Appreciate it.
Thanks.
Thanks.
Bye. Take care.